something that, especially in some of the overvalued and challenges in the market now that I know you're going to have very strong opinions on, effectively commodities, but let's be a little bit more narrow and focused on one that everyone is going to have some familiarity with, and that being gold. Short-term prognosis?
Oh, I have no idea about the short term. I think that gold is interesting for some of the following reasons. To me, the price of gold is really the reciprocal of the world's faith in the institution of managed currencies and of central banks. If you are happy with the likes of Janet Yellen and Mario Draghi, if you are happy with the methods and the techniques of modern central banking, namely the manipulation of interest rates and the manifestation of these great swarms of digital currencies, we call it quantitative easing or other such euphemisms. If all that appeals to you and you have confidence in it, then gold will not be for you. But if you entertain doubts about the efficacy of these policies, about their long-term consequences, then you ought to be interested in a monetary alternative. Now, there are many in the world today. If you are a dollar holder, you can choose alternative currencies. However, these alternative currencies are also under the management of people who share in the general doctrine and ideology of modern central banking. These people, the central bankers, are mainly professional scholars. They are lots of them former tenured economic faculty of major universities, and they believe in the efficiency and the efficacy of interest rate manipulation. They believe that central banks can and should intervene by raising up asset values through the purchase of fixed income securities. They believe that central banks ought to be, partially at least, in the business of economic planning. That's the modern doctrine. I share none of that. I believe that central banks ought not to be doing those things. Interest rates ought to be discovered in the marketplace rather than to be imposed from on high. I believe that the raising up of asset values is self-defeating because when central banks raise the prices of assets through financial manipulation, they are likewise raising the value of liabilities. Now, what's a liability? It's a promise to pay. Pension funds this country are in deep trouble because they can't meet the investment goals that they are confronted with. So if that is your view, if you too share in this basically critical view of the workings of modern central banks, you will want some sort of safe harbor monetary alternative. So some currencies, it seems to me that currencies are generally less desirable than gold because currencies are, after all, in competition with the dollar. They're managed pieces of paper. Gold has the merit of being outside the financial system. It's not anyone's liability. Gold is a freestanding monetary asset. It's got 5,000 years or so of good service under its belt. So, it's not to be confused, is gold, with an income-producing property. There's something wondrous as an investment about a business that generates free cash flow and can compound that. That is an investment. Gold is money. It's not an investment. It yields nothing. It reports no earnings. You don't get in a conference call and hear Mr. Gold saying you eat the numbers. So people ought to think less of gold as an investment than they should, it seems to me, as gold as a monetary alternative. It's something to consider as you might consider a stack of dollar bills. Dollar bills cost nothing to produce, and they are under the gun of the Federal Reserve System. Gold costs a lot to produce. It's scarce. It has a proven track record of at least appearing to be valuable to masses of people. So, in short, Angelo, I'm kind of bullish on it. Without any pretense knowing what's going to happen next week, next month, or even next year, I own it for the very long term.
A family of significant wealth and resources that is looking to be more active, owning gold. There's several different ways they could do it. Owning literal physical gold inside or outside the banking system. Opportunity within an ETF to be an LP interest in certain funds. What would you recommend?
Oh, I, without recommending anything, I tell you what I'm doing. I own about half and half. I own half of my gold position is in the metal itself, half is in mining shares. Now, the mining shares have been a great vale of tears because the management of those companies is often woefully inadequate. People who run mining companies often seem as if they're more interested in digging holes and in digging gold out of the earth than they are in producing value for the stockholders. They issue shares at inopportune and value destroying times. They, as business people, they are an abomination. In general, there are some exceptions. But I think that a family office managed by people who have achieved great success in management will often be disappointed by the managements of gold mining companies. Which is to say that you need someone who knows the good and the bad and the ugly. I can name a couple of people. One, my friend John Hathaway at an outfit called Tocqueville is, I think, very knowledgeable in choosing among the various gold mining managements, which is the least prone to destroy value through inopportune corporate activities. There's a wonderful mining guy in Canada called Pierre Lassant, and Pierre is one of the very few money makers in the world of gold. There are plenty of good engineers, but very few money makers, and Pierre is one of them. So gold mining companies have the great merit of giving you a leveraged return on a rise in the price of the underlying thing, namely bullion itself. They are also prone to give you the heartache of seeing the particular mines they manage underperform, or seeing the shares they issue underperform because they have chosen to dilute them. So it takes your money and it pays your money and it takes your choices. I think that the future of gold is not so much in the hands of the people who manage gold, but rather in the hands of the central bankers who are insistent upon depreciating the value of the currencies under their remit. And it's in the hands of the people who, for now, are wholly complacent about those monetary policies. It seems I am astounded as the years wear on, and certainly the years do wear on, at the tolerance of people towards the malpractice, or is too strong a word, malpractice of the central bankers. We all should own a stock, Angelo, that in a company like the Fed. The Fed came out of the 2007, 8, and 9 troubles as the institution that failed abysmally in seeing those troubles coming. And yet it emerged with greater powers. Astounding. Nothing in the private sector approaches this. It's a paradox of failure and success. So the world for now is more or less fat and happy. The world more or less is on the same page as the central banks. It's happy to be on that page. I think that the world will come to its senses. I think that when it does, that people will look for a monetary alternative.